So we've got expert Harry Kane here, consumer expert, who's going to tell you everything you need to know about mortgages, and he'll have some tips on how you can save money. So whether you're actually thinking of buying a home or whether your mortgage has come up for renewal, you're going to be bound to be looking for the best deals. Do give us a call, whatever your situation is, 0207 862 2222. No question is too big or too small. Before, Harry, we speak to you about some of the best deals and what we should be doing with our mortgages, we've got you here, Albie, because actually you are the first-time buyers that we're always talking about. You're saving at the moment.
Goodness gracious me. Yes, I am. I'm rather embarrassed to say that I am living with my mother at the moment to save up for a house, and I'm hoping to buy a house towards a flat, towards the end of this year or next year. And I suppose, Harry, my question to you would be, what is your advice for someone in their late 20s or early 30s who's looking to buy in the next 12 months?
Well, do you know, I think you're doing exactly the right thing. You're saving your money by, living cheap, hopefully rent-free. Maybe you're paying some bills, I don't know. But I would say, when people are worried, is this the right time for me to buy? Is the market going up? Is the market going down? Am I going to end up with a flat that's not going to be worth anything? I always say, what matters is your personal circumstances. There's no point trying to kind of play stockbroker with your own life. What's most important is this right for you? And is this going to be something that I can afford? And is going to be a place that I can come home at the end of the evening and relax? That's the most important thing.
And what about shared ownership? You see a lot of these shared ownership schemes and the flats look beautiful. They're really well located. But I hear it's a scam. Is it a scam?
So with shared ownership, a really good way for people to get onto the housing ladder, because they don't have to kind of have a mortgage for the whole cost of a property. They maybe only buy 40%, 25%. But as you say, there is this issue that as leaseholders, they're responsible for the whole cost of things that go wrong. So if there's a cladding issue, if they've got to pay for a load of repairs, they are on the foot for it. So it's a really difficult situation for them. I think there's going to be a bit of reform around that. It is a risk, but it has those benefits of, you don't actually have to have the whole lump of cash that you need to buy a big flat. If you're worried about that kind of thing, the thing I always say is move to, as I did, move to Croydon out of London, move to the outskirts of Birmingham, move to Wolverhampton, move to somewhere that's going to be cheaper, that you can afford, so that you're not going to be worried, am I trapped in the leasehold?
When it comes to younger buyers, Kevin McLeod recently is in the headline saying, go to Germany, just buy outside of Britain. What's your thoughts on that?
Well, it's great if you can speak German. And I know that Kevin can speak a whole load of languages. That's all well and good. People have families. They've got things to do. I do think that there are actually opportunities for people that mortgages, you've got to optimise to find the best mortgage. But there are also things that people do in their lives that are actually probably more impactful than their mortgage. So if you're able to buy with someone, if you've got a partner, if you're lucky enough to be in that stable situation, it makes everything half as difficult. It is literally that much of a difference. Or if you want to buy with friends, as people do, or if you can move out of town, or live somewhere that's pretty squalid for a little bit, so that you can, build up that saving until you can buy somewhere nice.
Just can't imagine Albie living anywhere that squalid. But listen, we'll get back to the mortgages. What are the main type of mortgages that people should be looking out for that are out there as an option?
Yes, so mortgages, for me, it's like death. If I think too much about it, it just makes me go mad, because it's such huge sums of money that we're talking about, debt of hundreds of thousands of pounds. So it's really important how you're kind of laying that out month by month. The main division is going to be between getting a fixed rate mortgage and a variable rate mortgage. And a mortgage, a bit like a mobile phone contract, will have a good deal for a few years, and then it will go back to being a bad deal. And so in that good deal period, if you want a fixed rate, then for the next 2 years, the next 5 years, I'm going to be paying that amount of money every month until that period is over. If you have a variable rate, then you'll be paying a little bit above the Bank of England base rate, which is that big number that's set by the Bank of England for everyone to follow. Pay a little bit above that per month, so you don't know where it's going to go. But if you think that you're going to save money with that because you think the interest rates are going to come down, that's quite a good option.
And Harry, how do you put yourself in the best position as a first-time buyer to get the best mortgage possible that you can get? Are there any things that you can be doing beforehand to prepare for that?
Well, I mean, having a lot of money helps. And that is the sad truth of it. So, for example, if you've got a property, it's £500,000 and you have a £50,000 deposit, you can get a handful of mortgages that are 90% loan to value, which means that you're borrowing 450,000 and you've got your 50,000. Those will cost you more per month than if you've got 100,000 to put into that house, or if you're buying somewhere cheaper and that 50,000 is going to go a lot further. So the more of the value of the property, that loan to value, that you borrow from the bank, the riskier it is for them, and so you have to pay more. And so that's going to make the affordability really tricky. So if you can save up that cash to have a bigger chunk of change to give to the bank, it's going to make it cheaper for you.
And what ratio of deposit to house value would you recommend?
It's going to vary from person to person. Obviously, I'd love to say 100% that you own all of the property you pay in cash in a great big briefcase outright on day one. That's going to save you a load of money, but that's not possible for everybody. What I would say is that if you are at a point where you have, say, 66% of the value of a property that you want to borrow as a loan, if you can try and get together that few £1,000s to shift that to 65% of the loan to value, that takes you into a different grade boundary, as it were, a different category, which could be saving you a whole lot of money for the 5 years that you've fixed. So you have to really... the thing is, we've gotten down a tiny little rabbit hole of mortgages here. It's a hugely complicated area, and that's why we say, for those kind of decisions, it can be worth talking to a mortgage broker who can tell you this on a case-by-case basis, oftentimes for absolutely nothing. And so if you're in a complicated situation like that, you don't know what to do, talking to someone who knows what they're talking about is really useful.
OK, we're going to get to mortgage brokers potentially a little bit later, but I'm going to take a call now. Joe from Sheffield, do you have a question for Harry Kind?
I do. Hi, Storm. Hi, panel, and hi, Harry. Bit complicated. I was a teacher for 15 years, so I could access a mortgage. Then I got really poorly. I'm on ESA and PIP. I can't access any equity from the mortgage company. They are being incredibly nice to me, luckily. I've had to use my disability benefits to pay the interest. Of course, it's interest only on my mortgage because in April 2018, the government stopped, the Tory DWP stopped paying. They pay housing benefit, but for anyone who owns their own house. So I have to pay with disability benefits for that. And it's become impossible as the interest rates have gone up. And so I've applied. I know you're going to suggest an SMI. I've applied, but nothing in the literature indicated to me that I would only receive a tiny, tiny, weeny bit out of the £500 interest that I have to pay a month. They've only given me 133. I only found this out 2 weeks ago. And I'm in a complete crisis about it all because I cannot keep paying. I can't pay all this out of disability benefits. That's not what they're for. So my question is, I've spoken, of course, again to my mortgage. The best thing, and I would really recommend this to anybody listening, please, if you're in a difficult situation with your mortgage or your gas company or anybody, please stay in touch with them. It's the best thing you can do. They've helped me so much. They've been lovely to me. So they've given me a couple of options. They've said that I could get a fixed rate or go for variable rate. I've just been listening to what Harry said about loan to value, and mine's would be 45. So well under 66 or 65, it'd be 45.
OK, I just want to give Harry some time to answer your question. So any advice for Joe?
I mean, Joe, you must feel so trapped in that situation. And there are people, hundreds of people like that out there who are, through no fault of their own, in a situation where they probably wouldn't, kind of meet the affordability criteria that they met when you first got out that mortgage. In this case, Joe's doing completely the right things, and taking the words right out of my mouth is that if you're in these kind of difficult situations, reach out to your bank, because they can be incredibly understanding if they've got good customer service, but also they have a duty now under the new regulations to help people out. So if you're struggling to pay, get you onto an interest-only mortgage, for example, give you a mortgage holiday, maybe extend the term of your mortgage. I think in Joe's case, this is a really difficult one. At least she's in the situation of having a lot of the equity of her property. She owns a lot of that. There's not too much mortgage there. And aside from moving house here, or
sort of downsizing.
Downsizing and taking that money and really having that benefit of a little bit of cash in your pocket, and then maybe renting, so at least then she'll have that housing benefit to use. That is something to maybe consider. But she's doing the right thing, I think. Hopefully, if there is a fixed rate that's come along, which she thinks is affordable for her and is going to save her some money, I think that's probably the way to go if she doesn't want to move.
What happens if you don't contact your bank and you miss a payment?
Then you can end up in basically in arrears where you owe money to the bank, and in the long run you have that ends up with the bailiffs and evictions and all of that. That's not something the bank wants to happen. That's not something that you want to happen. The best thing to do is to be very upfront with this kind of thing to anyone that you owe money to and get onto some kind of payment plan. But I would say even if you get into arrears, if you miss a payment, straight away just get onto the phone with your bank, say this is the situation. They can come up with a solution.
Okay, so you've called your bank.
Yeah.
They may have come up with a solution that you either agree or disagree with. Is there anyone else that you can reach out to make sure that you're getting the best deal, that your bank really is serving you in the best interest? I mean, it must be a very stressful situation to be in. You just want as much advice as possible.
That's absolutely right. And I'd say there's kind of two halves to this. There's someone, a nerd like me, who can come along and say, like, this is the best deal, maybe talk to a mortgage broker, here are the deals that are on the market, this is, how to save you some money. But then there's people who are going to be saying, this is the mental health crisis for you. This is an incredibly stressful situation. This is what you can do to get yourself out of that. And so I think really important, I know we've got some numbers put on the screen here.
Yep, let's do that.
National Debt Line, Citizens Advice Bureau as well, and Shelter, who can give that kind of crisis advice and can get you through to the right people, can maybe put you in touch with some mental health counselling, but also can say, well, have you considered this kind of grant or this kind of extra payment, this little bit of extra support? The thing is, don't suffer in silence. Don't bury your head in the sand on this.
And speak to somebody about it.
Speak to someone as soon as
possible. Air it as much as possible. A problem shared is a problem halved.
Exactly.
Okay, the thing that people will want to know, best deals at the moment.
Yes. So that is all, as I said, going to depend on your loan to value. It's going to depend on how long you want to fix for. It's going to depend on how long you want your mortgage to last for. Are you going to pay this off over 25 years, 30 years, 35? And so I had a quick look on the Which website this morning, see what the latest are. These are always changing. But if you've got 90% loan to value, so you've got 10% deposit, you're borrowing 90%, the best at the moment we found for a 2-year fix, Coventry Building Society, it's about 5.11% with about £1,000 worth of fee.
Okay.
So pretty good deal, but bearing in mind, I fixed 2 years ago, I've got 1.5%. So, yes, it's a lot more expensive than it used to be, but you've got to shop around and make sure you're on a deal for you.
Oh, right, okay. I mean, shopping around is the thing to do. Have you found this helpful, Albie?
Super helpful. Thank you so much.
Okay, just keep saving. The thing that I've taken away is you need a crystal ball and a partner if you want to get a mortgage now. Huge thank you to Harry Kine there from Which and Albie for joining us.